Hello and welcome to another episode of Policy in Wonderland. I'm your host, Evy Amira, and in Policy in Wonderland, just like Alice, we are going to explore the wonderful world of insurance, InsurTech, and everything that's connected to this amazing ecosystem. In Policy in Wonderland, you will meet startups from all over the world, key figures, brokers, and more. And before we jump in, remember to like, subscribe, and share this episode and the whole channel, as a matter of fact. And don't forget to sign up for our newsletter to stay updated on all things InsurTech and connect with others who share your passion to this innovation in insurance. So without further ado, I want to invite my dear guest and friend to join me as we go down the rabbit hole. So please welcome Clint Houck. Hey, Clint, how you doing?
Hey, I'm doing well, Evy. Thank you so much for having me on today.
Finally, we're doing a podcast after a long conversation about InsurTech, technology, and whatever. So, yeah, thank you for being with us. Let's start from the beginning. A bit about background, your personal journey into insurance, how you end up to be very passionate about insurance eventually. So, take it from here.
Absolutely. So I grew up in this industry. Both my parents were in the insurance industry. The insurance paid for my schooling. Insurance paid for my childhood. And when I graduated college in 2008, insurance was the job that continued to be there for me as I watched a number of peers lose job offers during the mortgage collapse at that time. So this is an industry that's very near and dear to my heart because it's multi-generational inside of my family and has provided a great quality of life for myself and for my family at large. So my background, I've sat in pretty much every seat of the industry except for the claims side of the house. I interned there in college, realized very quickly that is a very absolutely critical and necessary job, but it can also be a very thankless job, and have nothing but the utmost respect for the folks that build a career in claims. But that was definitely not a spot for me to fit. But during my time, I've been a commercial fire underwriter. I've owned multiple insurance agencies, both traditional captive brick and mortar agencies to independent digital distribution and corporately owned digital agencies. I've worked for a number of carriers, both captive and independent. I've built a couple of InsurTechs, and now I'm actually leading partnerships and distribution at Fair, which is a non-insurance carrier bringing mechanical breakdown protection into the insurance industry.
We'll talk about FAIR in a sec, but before we talk about FAIR and what you're doing, it's important to me to understand, first of all, the insurance agency, let's say, ecosystem right now.
Yeah.
Insurance agencies are facing like new headwinds, shrinking commissions, pressure to keep up with technology, and to be insurance agent in these days is not something that's very easy to do. What is changing right now that makes this moment so important for agencies?
Absolutely. So I look at this. I opened my first insurance agency in 2012. I was opening a State Farm insurance agency, and at that point, we were just making this transition where individuals and consumers were starting to actually shop for insurance online. And so, internet leads, digital distribution, all of this, none of this had existed previously, and we were at an inflection point where the industry didn't quite see it, except for those few folks that were at the tip of the spear or at the crest of the wave that were buying internet leads, that were figuring out we're learning what an API was and how to use it to digitally offer insurance. And those folks that jumped in at that moment and didn't fight against it, but embraced it, were the ones that you saw the rapid growth and success there, because they were going to meet the consumer where the consumer wanted to be met. And at that moment, that meant on the internet, that meant through email, and that meant through text message. And so that seeing that going from, hey, I was told to build my agency off of direct mail, knocking on doors with calendars with my name and phone number on it, right? Having index cards in my pocket when I'm out in public to generate leads and new prospects by asking people, right? That was what I was told I needed to do to build my insurance agency. And then I opened my agency and I saw that the entire game was changing. And we're having another one of those moments now because technology and carriers are to the point where being that local agent or having that carrier access is no longer a competitive advantage because anybody can get that carrier access. Anybody can reach out to your customer that's in your community, and anybody can offer any product that's out there in the market, right? So we're at this point where it's now saying, how do you leverage to make your life as an agency owner easier, faster, more efficient, more effective? So whatever that challenge is that your customer is facing, or whatever that concern is that they have, you're able to provide a solution to them as a part of that larger portfolio of managing their risk and the financial security of either their family or their business. And so when I look at this, I say, traditionally, the captive insurance agency model, the State Farm model, has been you've got one product or one carrier. So you got one at bat to close a piece of business, but you have 100 different products within that carrier. And so you can sell really deep into that account or into that household. And that was their competitive advantage. The independent channel was, hey, we don't have a lot of products, but we've got a lot of carrier partnerships. So while we may only be selling auto and home insurance with some umbrella thrown in there, we can do that with 20 carriers. So we can win off of price. And over here with State Farm, we win off of depth of relationship. Well, there's no longer that separation of church and state. With technology today and with product availability today, as an agency owner, you can have choice and you can have depth. And those that figure out how to do both, those are the ones that win and set themselves apart from the traditional models that exist. And yet that's something that our industry is facing that pushback on right now. Those folks that have said, I run a PNC agency, that's all I do. Well, they're losing some of that competitive advantage with all that carrier choice. If you're a captive agency owner, you're saying, hey, I've got one carrier that I know inside and out, and I can do in-depth risk exposure and analysis and advising. Well, guess what? So can ChatGPT these days if you ask the right questions and prompts. So you need to be able to operate in both worlds and do that really well to be able to be that next, tip of the spear, crest of the wave, and win in today's marketplace.
And it's interesting, like the next stage that you develop with FAIR, because we are not talking just about insurance right now. We are talking about, I will not say it's the next stage, but is to expand insurance to another, to another, let's say, industries maybe. Okay. And before, just keep like you in one sentence, what is FAIR? And after that, explain a bit about what is the warranty industry. What does it mean, warranty?
Absolutely. So FAIR is a newer carrier to the insurance industry, and we offer mechanical breakdown protection to address the coverage gap that auto insurance has currently in today's marketplace. The warranty industry as a whole has historically been sold inside of car dealerships in the US. So the only time you really get offered mechanical breakdown protection is when you're buying that car or you're seeing late night infomercials on TV of late night TV, movie reruns. And yet at the end of the day, where I think we go as an industry is we don't sell insurance anymore. We protect people from risk and we help them plan for their financial future. Insurance is a tool that can be used to accomplish that. And bringing in something like FAIR and like warranty is another tool to be able to address that because there's a coverage gap there inside of traditional insurance. So you think of collision protects your vehicle if you hit an object or an object hits you. Comprehensive protects your vehicle from theft, vandalism, acts of nature. And warranty protects your vehicle from that sudden mechanical breakdown that happens unexpectedly. And it's just indemnifying you from loss.
But for those who are not experts from the insurance world, but what is the difference? Because if I have like insurance policy, auto insurance policy and warranty policy, let's say warranty policy for the matter of the conversation, what is the difference?
Yeah.
What I'm getting with fair? Again, this is not a marketing, of course, but it's very important for me because you're knowledgeable and persona here. What is the differentiation?
Absolutely. So what we're talking about is the difference between auto insurance and auto warranty. So auto insurance protects you as a consumer against an accident and the cost that comes from that accident. So if you're at fault in an accident and somebody sues you, you have liability coverage under your auto insurance. If your car's damaged due to an accident, you're covered under comprehensive or collision. But the triggering event is an actual accident that causes damage and loss to you. For warranty, the triggering event is a mechanical breakdown. If your car just breaks down, auto insurance says there's no accident. There was nothing unexpected that caused damage and harm to you. For warranty, there's no coverage if you're in an accident and your car is damaged. Well, that's not covered under warranty. But if your car just has a breakdown, hey, your transmission goes out, your engine blows up, your air conditioning stops working, you just have breakdown of the vehicle, that's where warranty comes in and provides coverage. And so they complement each other in addressing the gaps that both products have.
So as a matter of fact, for agencies, because we're talking about right now, they need to reinvent themselves, like the insurance agent. You bring them like a new revenue stream?
Yeah, so there's a couple of value propositions for bringing a warranty product into an insurance agency, and it addresses some of the challenges that agencies are facing. So yeah, the easiest and fastest one is it's a new revenue stream, right? It's another line of business that you can sell to an existing client. So you've already invested in the customer acquisition costs of being able to talk to this consumer or to this business, this account. So you can bring in the warranty as additional revenue with no additional expense. The other side of it, though, is also it creates a stickier product to keep those clients in your book. So with the advancements of technology, with the advancements of AI, it's only becoming easier and easier for consumers to shop and switch their insurance. And prices change. And as an agency, you don't control the pricing of your product. You don't control the claims experience of your product. You're at the whims of the marketplace and the carriers you represent. And so customers shop every 6 months, every 12 months, you can get a lot of churn in your book and you're constantly playing that retention battle. With warranty, the pricing is based off the age and mileage of the vehicle, and it's a multi-year term product. So auto insurance every 6 months, you've got to sign a new contract, you get new pricing. With warranty, you can lock in a premium, you can lock in a price that can exist for 1, 5, 10, 12 plus years of coverage. And because it's based off of the age and mileage of the vehicle when the coverage is first purchased, it automatically makes itself stickier because if the customer does want to try to shop at a year down the road, 5 years down the road, the vehicle's now a higher risk and a higher cost because it's older and there's more miles on it. And so this creates a really strong retention tool along with an additional revenue tool for an agency.
Interesting. So it's kind of, it's a very stickiness tool for the client themselves.
Correct. And it's a lot easier of a product to learn and cross-sell from auto insurance than other products because you're still talking about protecting their vehicle. You're still addressing the primary concern that consumer has, which is their car and the driving experience that they have and the potential loss risk exposures they have when operating their vehicle.
Yeah, because if it's about auto insurance, they will say, yeah, I'm a great driver. I will not have any accident at all. Great.
Yep.
But for the car itself, they will not know if there will be like a mechanical breakdown or something like that. So they need to be safe here.
Yeah, well, and even from your team's perspective, for me to learn how to sell this product, the cross sell is, all right, pick your deductible now for comprehensive collision and mechanical breakdown coverage. You pay your deductible, and then the companies pay the rest to fix your vehicle if it's damaged or you have an accident. That's a really simple conversation versus, all right, Evy, we talked about your auto insurance. By the way, there was a funeral benefit on your auto insurance policy. Do you have life insurance? Well, let me now talk to you about life insurance. Let's do a financial needs analysis. Let's talk about your health and your exercise and your tobacco use. And now we're going to talk about universal life and whole life and term life. And that's a whole different conversation for your customer or your client to understand. That's a whole different conversation and complexity for your team to be able to understand how to pivot into that product to sell. It's not, and it can be done very well and very successfully. State Farm agencies do it really, really well. But that's a lot harder to learn as an additional line of business to sell compared to saying, hey, we can bring in mechanical breakdown protection. We can bring in warranty because we're still just talking about the car. So for a team to learn this product, they can pick it up and they can start selling it within a day or two of just having a couple of conversations. In fact, I went to go work with a new agency partner down in Dallas the other week. And this agent that I was working with, I helped her walk through quotes side by side. We quoted 3 customers. And I made a bet with her. I said, hey, I bet you can't get to 10 no's before you get to 1 yes in offering this product. And I spent 20 minutes with her. That was it. So 20 minutes of my time sitting next to her. We did 3 practice quotes. And then within that next week, she had quoted 5 customers and then got her first sale. So she didn't even get she got halfway to the 10 before she already saw a sale. And she had the confidence to be able to do that because it's a really complementary. It just makes logical sense to bring it up in the conversation around auto insurance.
Correct me if I'm wrong, but the warranty space is not always had the best reputation with consumers, right?
Yeah.
And
that's actually
right now with insurance is not going to be even harder. Again, with your example, probably not. But how do you rebuild trust in category that where many people are skeptical from the beginning?
Yeah, absolutely. So it happens at a couple of different levels, and this is one of the reasons why we as a company decided that warranty has always been sold through car dealerships. We don't sell through car dealerships. We don't distribute through that channel because we think that's one of the primary challenges of what's created a bad experience is you have somebody that isn't a risk advisor selling you a product that protects you from risk. And it's a one-time experience. The odds of you only ever go back to that car dealership when you're ready to buy another car versus your insurance agent. You could be talking to them every 6 months. You talk to them every time you have a claim. You talk to them every time you have a change in your life and are buying a house or bringing a new kid into the world, right? So that this person is already set up as a trusted advisor to the consumer, to the insured. And that's why it makes sense to bring, for us as Fair, to distribute through insurance agencies because they're talking about risk. They understand that concept as a whole. And their entire career in business is built around protecting people from risk versus selling an unrelated product and just kind of trying to bolt it on. And that bolting on of a warranty to a car sale creates a poor customer experience and creates a poor sales experience of buying that product. The other side of it is from us as a carrier, from a claim standpoint. So because we sell through the insurance channel and we know that reputation is everything on that side of the house, we make sure that our claims team is 100% in-house, right? We don't outsource it to a TPA where there can be conflicting motivations on they make money from us as a carrier by what their claims approval ratings are and whatever factors are there. No, everything is in-house. They're full-time employees. They're former mechanics. They're former claim reps from the insurance industry, right? So they understand what it means to settle a claim and get somebody back on the road as quickly and as efficiently as possible. And then our product can be canceled just like an auto insurance policy can. So if a customer decides they're unhappy with us, they can cancel at any point and they would get a refund for any unearned premiums. If you buy a warranty through a car dealership, they package that warranty into your vehicle loan. So the only way to get out of that is if you refinance the vehicle loan and you go through a multi-step paper process of getting things notarized and mailed into the warranty carriers. So they make it really hard to cancel the product there. So for us, the the way we keep customers is by having a great customer experience versus our competition. The way they keep customers is by locking it into financial instruments that they can't get out of.
The second part of the conversation I want to talk about, of course, AI, because you and I are talking a lot about this, and I just can say, AI and take it from here, and and yeah, we will not have enough time to speak about everything. But where do you see AI creating the most value for insurance agencies?
Yeah.
Okay? And if it's in sales, service, cross-selling, claims, maybe support, client education, even because with warranty, we had a lot of conversation about the education, how to educate the journey with if it's the client and if it's with the agent. So, and even from operational efficiency, right?
Mm-hmm.
What is your take here?
Yeah, absolutely. So I think you look at any aspect of our business, there are use cases for applicable AI. Some of them are more immediate. Some of them are more pipe dream down the road because there's a lot of legal and trust that needs to be built in there for something like AI to start binding insurance without human oversight or having a licensed agent involved in the process. That requires a rewriting of 50 states of legislation, along with significant trust from carriers and from agencies and from the consumer of actually buying this product from AI. So I think there's an absolute, we will see AI selling insurance, selling warranty, selling any product that you've historically been able to buy online or buy from a person in our industry. But I think there's still a ways to go before we see that. Where I really see the most immediate value is the behind the scenes side of things. And there's a number of co-pilots out there, and there's a number of agentic AI solutions where they can operate computers in a human-like manner to go and say, hey, drop a deck page here, and it'll go out and automatically quote all the carriers and bring all those quotes back. So you don't have to manually log in and re-key information over and over again, especially in the E&S market or the large commercial market where comparative raters don't have a presence in today's world. But actually where I'm most excited about it is the coaching and role-playing space. So an area that I've been focusing on a lot is helping folks understand how to explain and sell in new products, how to service products. And while there's a lot of folks that have come into the insurance industry and insurance agencies are sales organizations, I wouldn't say that there is, everybody's a high caliber sales and service individual, right? There's a lot to learn in our industry to do it really, really well. And you only get that expertise by a lot of at-bats. If you have enough sales conversations, you start knowing what the questions are going to be before they're even asked. If you have a lot of service conversations, you start knowing what the pain points are going to be before the person even has the complaint. But historically, you could only really get that experience by actually trial by fire. Missing out, losing that sale, getting that customer that's really angry that cancels their account with you. And that makes people gun shy. That makes them afraid to pick up the phone and have the sales conversation. That makes them afraid to provide that service or make promises because they don't know if what they're saying is actually correct or how it'll be received. And so where AI gets really interesting is it's good enough now where it can create those types of sales conversations. You can talk to AI and it'll talk back to you like an angry customer, like a detail-oriented customer, like somebody that is very skeptical of the product, somebody that has no knowledge of the product. And you can have as many at-bats that are just as realistic as a real person-to-person conversation that gives that confidence, that builds that confidence in a way that traditional role plays haven't. And so I'm really excited about that as a use case of AI because it doesn't have the same legal exposures and roadblocks that surfacing it directly to consumers have. and yet it can still have an immediate impact on your agency using it as a training tool. There's actually a really interesting AI company in the space right now called Symphony AI. I don't have any, we don't do any business together. I've seen them in a past life, and when I was working in the BC side of State Farm, but they're a really interesting company that provides AI role playing for both sales and service. And it is an excellent tool. And I believe that this is something that is being slightly overlooked by our industry right now, but will have a massive impact in the near future.
I think that from the educational perspective, it's going to be one of the, I don't know if the best, but a very huge impact.
Yeah. Well, and as an industry, as an industry, we keep talking about this worry of retirements.
Exactly. Exactly what I want to do. Yeah.
Right. And so what's going to happen when the industry, we see this mass wave of retirements and we have all these new folks come in? Well, quite honestly, I don't believe that we're going to be there from a standpoint where AI can replace all of those people. But AI can help train the replacements of those people as the next generation of folks come into the insurance industry to be able to rapidly, effectively, and efficiently generate that expertise that they need to replace that loss of expertise from the retirees.
I really want to connect you to this to the next step. We can see a lot of founders, let's say entrepreneurs, that wanted to go to insurance or to build InsurTech, but they don't have the knowledgeable about what is underwriting, what is the underwriting process, or distribution, how the distribution channel in insurance is working, and so on. And here I want to pick your brain from your client, from a State Farm. When you were in State Farm, what are the biggest challenge that you saw when founder came to you, speak about doing this pitch, and say, okay, it's very nice, he's a cool dude, but there is nothing here, or he's not, I don't know anything, or
Yeah, absolutely. So to give a little bit of context, prior to joining FAIR, I was on the innovation and ventures team. That's actually how I met the founder at FAIR and ended up joining the team. He was one of the early startups that I got to meet. And FAIR was actually is a perfect example of this. When talking to them, great products, great technology, really easy to use, but there was a gap in understanding how it fit into the industry as a whole. And this is what a lot of InsurTechs that come from outside the industry, founders that come from outside the industry, fail to recognize. That says, hey, if you're going to distribute through, you want your technology to be used and your customers are insurance agencies, you have to understand what the difference is between being a CSR versus an account executive versus a producer versus an agency principal. What's the difference between a captive agency versus an independent agency? By the way, how many different systems and what's an AMS? What's a comparative rater? How do I use 12 different carriers? What's the difference between P&C, life and health, E&S, right? So all of this context that says, look, you may have an interesting product, you may have an interesting technology, and it does this one piece a whole lot better. But that is inside of a day-to-day of an agent. As soon as they're done talking to you, they've got 15 missed calls. 3 of them are sales, 12 of them are service activities. They've got a dozen other carriers that are also interested in where they're going to write new business with them, and they're worried about loss ratios and retention rates and all of these pieces. And so as an InsurTech founder, if you don't understand what the true pain point is, what the ROI is that your technology is going to generate for your partners, and what you're asking of them to actually adopt your tool or your technology into their business, and what that cost is to them, you're not going to find that success. You need to be able to speak that language and help and show them that you truly understand what it means to be in their seat and what you're asking of them in pain and in cost and in effort to be able to purchase your product and bring it into their business. Same idea on the carrier side, because they have a whole different set of metrics and challenges and issues. And what works for an agency will not work for a carrier. And what works for a carrier will not work for a large brokerage. And What works for life and health won't work for PNC, right? There are things that relate there, but those are different layers to our business, and those are all different parties that you've got to build specific models and go-to-market approaches for.
I see you one of the master in insurance distribution, especially. I see you as a master in the insurance distribution.
Thank you.
And don't apologize. Where do you see startups often misunderstand insurance distribution? Because yes, if they don't know about terms and language and culture, insurance distribution is kind of even another angle that you must to control and understand it.
So from an insurance distribution side of things, I think a couple of areas that get misunderstood the most by new founders coming into the industry is one that there are a lot of different customer segments and how they want to do business. So if you build a really great digital process and experience, that's going to address a certain part of the market, but it's not going to address the entire market. Because at the end of the day, for those customers that have had a bad claims experience or are high net worth, they still want that trusted advisor that they can call and they go, I know if I call Evy, I'm going to get an answer. I've got somebody to hold accountable for protecting me, or if I have a claim that I know who's going to take care of me. Versus that digital consumer that's saying is predominantly more price focused, that says, look, I'm only interested in making it fast, easy, and as cheap as possible. But as a result of that business isn't going to stick as much. And so usually your digital monoline auto insurance customers, that business is going to churn every 6 to 8 months. You're going to have to replace that entire book based off of that customer experience. But if you get that in-person customer that's got 3 lines of business with you, they come into your office, they want to know Evy or who their agent is, that customer is going to stay 5 to 10 years with you. And so your unit economics looks exponentially different depending upon what your go-to-market approach is for distribution. And so if you take unit economics for traditional in-person customers and try to apply that to your digital business model, you're going to fail, and you're not going to understand why, because you missed on recognizing that the customer segments were truly different.
Gold. As for the last question, we had a lot of conversation, and I really, sometimes I really think maybe we need to record it, but it's good for there is enough podcasts and there is enough materials around it. So let's stay in the structure. Let's talk about the future agent. If you look, I don't know if 5 years is too long or too short, but it's very close. But let's say 2030. Okay. What will the successful insurance agent look like? What will they do less of, or what will they do more of, or what capabilities will they need to survive? If survive is the correct word here.
Yeah, I would say the agents of the future that will continue to thrive and grow and be successful are those that are using technology to take all of the traditional prep work and data entry work out of their business. And so you are no longer, it's no longer because, hey, I can type or I've got a better CRM system that keeps track of notes, because AI will take care of that for you. You can just type in a query prompt. You can vibe code your way to managing your book of business from a block and tackling side of things. It's going to be that agent, that producer that builds that connection. As we go more and more digital as a society and in general, you're seeing, there was an article the other day out there about millennials having a backlash against technology. They're going back to flip phones. They're going back to events in real life. They're going back to that simpler time. And what I'm seeing and what I'm theorizing is that the agencies that will be most successful are those that are able to build those human to human connections because everybody else is going to be the same from a technology standpoint. If you're really good at relationship management, that's where you're going to be successful. You can get technical knowledge, you can do app submission, you can do claims processes. Technology will be there to handle that. It's going to be how well do I connect with Evy and how well does Evy trust me, that I'm actually looking out for his best interests versus just trying to maximize how much money I can make off of him before he cancels and goes to a competitor.
And it's completely like it's a closure to what you said earlier about to be a trusted advisor as an insurance agent, but not as longer as a just insurance agent, but as a risk manager for the family, for the car owners, for the auto owners, and not just offering insurance policy. Let's take care of the warranty. Let's care about your health, etc. But as an holistic program.
Right. We're here to think about all the things that the average person doesn't think about every day, but we think about them every day.
And don't want to think about it.
Yep. Somebody that goes and says, I want to buy auto insurance and I'm buying full coverage, they think full coverage means they're covered for everything, because this isn't what they do all day long, every day, right? So that's where we, as that relationship connection, says, look, I trust Clint or I trust Evy to be able to help me understand that full coverage on auto insurance doesn't mean I'm fully protected. I also need that mechanical breakdown coverage through a warranty contract, and that protecting my family isn't just about buying home, auto, and umbrella, but I also need to think about life insurance. And I also need to think about financial planning and retirement planning and what compounding interest means. And so bringing all of those things together and being able to walk somebody through that and helping be that voice of reason and that guide for them, that's what's going to set apart agencies of the future. And crazy thing is that's none of that's any different than the really successful agencies of today.
Amazing. Clint, thank you very much. I know that we say so for 40 minutes, but yeah, for you, I can take it even longer. Thank you very much for your time. And let's leave with the last sentence that you think it's worth to say.
Well, Evy, I really appreciate you having me on. I think at the end of the day, our job and the thing that we get to do and make a living at is helping protect people. And that is one of the coolest things, to be able to say I can provide for my family by protecting others.
And that's a great final. Awesome. Thank you very much, Clint.
Hey, thank you, Evy.